Alright guys, well, today we're just going to cover a couple of the recent setups. I guess we'll just look at Crude and maybe the 60 if we get to it. I wanted to cover the reasons for the entry here. This was Friday. Yeah, right, Friday. And during the day, during the morning, I had been looking to short this as a potential C wave high. Well, it was a C wave high, but I'll get into that in a moment. This is a complex correction. So I got in a little bit too early here and then got stopped out. And I was saying how if it does come back up and tick this high, then I'll likely get back into this short, as this is a potential first lower high, and then we would get the big C wave down for the fourth wave. Well, it may end up being something other than a fourth wave, but we'll get into that a little bit later too. So what I was doing here was attempting to catch the first lower high after this massive run up that we've seen in Crude over the past I guess it's been about a month, hasn't it? So what I want to do is I want to cover all the reasons for getting into this short, and I had posted all of this in the hip chat when I took it, but this was one of the nicer lower highs that I had seen in a while, and I want to say that's let's see, that would have been on the 18th right here. Yeah, okay, that was the 19th on Friday. So I had shorted one contract right here, and I posted this picture. So what you had here, and we'll go to that chart in a second, what you had here was two different channels all coming together on the same bar, same time and price. You had the median line intersecting the channel line using this channel here, and I'll show you why I chose that high, that low. That was the last major low before the final upswing. And you had its median line intersecting its channel line right there in time and price. And then using this channel, you had its median line intersecting its channel line in both time and price. So you had four areas coming together right there on that bar. And I actually got into it a little bit early. And then I had another limit order sitting, well, I had two other limit orders sitting just above that in case it did throw it over a little bit. And then it started coming down. Well, I posted that chart right when it was right there. And that is a massive selling climax churn bar right before the close. All right, so that worried me a little bit. I think I actually wrote that there. I'm short. That reversal back up from the VWAP is a bit concerning, right? Well, then it came up, and I sold that next churn bar on the 2-minute right here. And then as it came up to the point of control of this bar, I sold one tick below the point of control of that bar, which is, you can see that little line right there. So those were the three contracts that I shorted, and that's right where it closed. It closed essentially right on my entry price, one tick above it. My average price was $49.11. And then when it opened, it immediately gapped down, and then you get this strange bar here where it's, what is that? It's like a 40 tick range, it looks like. It's a 50 tick range there. 47 ticks on one 5-minute candle. on Sunday night. And then I had my stop just above that. I think I had a 6-tick stop on that. And then I ended up getting, I think it was $4,600 out of that trade with a 6-tick stop. So that's, you know, if you can catch just even one of these a month, that's really, those are the trades that really grow the account. And you know, you never know when these are going to set up. They might set up in the overnight even. There was one that I was just going over with Jeremy. We're talking about Blackbird today. And I was showing him an example of what I'm wanting to do with Blackbird and all of that. And I was using an example from the 6E, where the 6E had come down perfectly to this area. Let me show you. Perfectly to this warning, this median line, sorry, this lower median line right here. And that was at 1 o'clock in the morning. And then the 5-minute chart at that spot, and this is what I was doing here, building out this example, is I was lining all of this up on the 5-minute from the hourly. And that's just a perfect pullback to the lower median line that we have been riding up for this entire uptrend in the 6E. We've just been riding it up, and then we pulled right back to where the midline is intersecting that lower median line. And then we get another push up. I was thinking it might continue up off of it one more time, but it didn't really set up, and it's kind of this, the way that this wave looks very much like a B wave. You see how it's rounding out right here? You get that first strong move up, and then it starts to get this rounded look. That's kind of the typical look to a lower high. And this set up as a lower high right here on the 20-minute, and if we get time, we'll come back to this one, as an upper median line trade. This is your typical Alan Andrews style trade where you're simply connecting the previous two swings and it's a down sloping trend line, and then you pull away from that and then pull right back to the median line. That's just your typical median line trade. We were talking about that this morning, but it's set up essentially right when I opened the room. So we'll come back to that one. But like I was saying, these, you know, you never know when the perfect setup is going to occur. It might be in the middle of the night. It seems like just about every single day it's occurring at about between 2 and 4 a.m. my time in Crude or the 6E, you know, during the European Open, European session. But anyhow, here you also had pretty strong bullish divergence on the 5-minute. You had a massive selling climax, which was also a churn bar, an extreme spike in the relative volume. And then you also had a perfect touch of that channel line right there. So you had three areas coming together. Big churn bar on the hourly, as you can see here, incredibly oversold. You got kind of a, call it what you will, but it's kind of a, it's more like a flat, isn't it? Yeah, it's a flat. You got this big ABC down. C is 5 waves. And then you get the next push up. So this is all likely going to end up being a big correction that'll come back down. So we're likely going to come back below this low before we find another major low. Unless, of course, this is the major reversal, which it might be. At any rate, let's go over this setup in Crude here. All right, so the chart that I had posted was this 20-minute chart. So at this point right here, I was looking for a short. This bar plotted pretty quickly. And like I always say about C waves, what do I say? C waves are typically V tops or V bottoms, right? You see that all the time. So if we're looking for a C wave on the 20-minute chart, what's it going to look like on the 5-minute? It's going to look like a V top most of the time. Of course, not always. You can't say always with anything in trading, but you see this over and over and over. That's why I was, it looked stupid when I was doing this. It looked pretty ridiculous that I'm shorting this huge momentum move to the upside on this massive bar. But look at the density of that bar. So what does the density mean again? That's 80% density. And the density is looking at what? It's looking at volume per range. So if you have very low density on a really strong up move, that's not breaking out to new highs, but it's retracing the previous impulsive move to the downside. And we say impulsive move because that's a straight shot to the downside. That's your major reversal. Look at that. So if we've been going up, pretty strong up, very strong up, and then whoops, not so strong at all. And you've got another set, completed 5 waves to the upside, and that 5th wave traces out 5 waves beautifully. And then you see a reversal back down like this. What's going on? Well, it's pretty obvious that you put in a major high, and now you're going to correct this impulsive move down, and you're going to put in a lower high. So that's what I was waiting for all day long. I thought it set up right here. I attempted it. I got ticked out, 2 ticks, and then watched it go down from there. And when this happens, when this sets up, when you get this strong push down, this is the high here, and this is occurring in the middle of the night. So you get this strong push down, and then you get this long drawn out correction. It's not so long and drawn out in this case, this first part of it. What do we say about this? You're not guaranteed that that is the ABC. It might be the first ABC of a much longer correction, what we call a complex correction. And you're not guaranteed to break this low. But I'd say a fairly good majority of the time you will break that B wave low. And look exactly what happened. It came right down and it broke the B wave low. And what do you think is going to happen when you see a move like that? You think it's just going to keep on going to the, straight down. Doesn't break the overnight low, but it breaks the B wave low, and then what happens? Straight back up, straight back down, straight back up. Never can get through. When you see that bar right there, again, you're thinking, oh, it's going to break. It's going to go from here. But no. And then it goes right back up. And when it finally comes back and it takes out this high, look at how perfect all of the relationships are between all of these waves. All of this crazy looking overlapping. If you had no idea about an Elliott wave or market geometry, there's no way you could make any sense out of any of this. It's just bizarre. But then when you apply all of the market geometry, it just makes perfect sense. And then back here on the 20-minute, I'm looking at this and we're correcting. And what is my major low before this high? Which is why I drew that and I posted it real time. What's my major low before this high? Well, is it this one? Not really. Is it this one? I'd say it's this one. Because this is the point, this little section right here, this is the point where you shifted momentum. Got really strong momentum, and then you get a snapback. And then all of this takes so long to develop, and that's your final wave to the upside. So I would say when it comes to marking these, this is, actually that would be 2 right there. This is how you would mark it. So I would want to look at the end of that 4th wave right there. And you might try to count this as some kind of a triangle, and that's fine, but when it comes to doing the market geometry, I'm more interested in this swing point right here than I am any of these. So, and for one thing, if you did draw it from these, by the time you made it up to this high right here, you had already gone through those areas. So none of those areas had been respected, and none of those areas would have even been in play by the time you made it to this spot. So this was really the last and best place to draw from when you're looking to connect this low to a preceding low so that you can find a downsloping area to trade short from. Because I do, prefer to have at least one area that's sloping in favor of the trade. I don't want to be trying to trade short when all of my channels are pointing to the upside and I'm at the top of those channels. That would be a good place to get out of a long, but not necessarily a good place to get into a short. Which is why, which is why I had been waiting for this lower high. Like I said, I took that first attempt, got stopped out. I was, I let that one get to me. I got pretty bent out of shape about that one, if you remember how that was in the room. And then finally it set up right here perfectly. So when I connect from this low to this low, and then we go forward in time, right there, you're intersecting the channel and its median line the same time and price. I mean, it doesn't have to be exact. It rarely will be exact. This is about as exact as you can hope for right here on the 5-minute. But you have both of these two different channels with a bar intersecting this channel's median line and auto line, channel line, and this channel's median line and auto line, channel line right here. All right, so that bar is coming together perfectly symmetrically using two different channels. This one happens to be downsloping on the 20, which is the main reason for the trade. And then this one is essentially sideways on the 5-minute. And then you just pull back to that downsloping channel line right here, which is where I shorted the final one with my stop, literally just a few ticks from being stopped out. Stop was probably a little bit too tight, really. It should have been back behind this median line if it would have been in a safer spot, but that would have been, upwards of 12, 15 ticks, which I don't really prefer to use. And then I don't know if we actually had a point of control of this swing anywhere. Let's see. I don't remember actually using that, so I couldn't have had that as a reason for the trade, but let's see if it actually coincided. And yeah, it did. You see the point of control of that swing high? You see where it's at? It's at 49.20. And it came up to 49.18 if I remember. Yeah, 49.18. So it came to within 2 ticks of the point of control of this swing high. And I can't take any credit for looking at the point of control of swings. I got all that purely from that order flow analytics guy, what's his name? DB Vallejo. and then Virgil showed me some of this stuff. So that's just one more way to confirm a pullback or a lower high. If you're looking for that, which in this case I was, it's just one more way to confirm that that is the final spot for that lower high. And then you end up with this complex correction. And I say it's complex. You could just count that as a standard A, B, C, and that's fine, but I would kind of prefer to count this as a W, X, and then Y, and then subdivide this as a zigzag. And the reason I say that is when you start looking at, is it complex, or what kind of correction am I looking at, and that's really only going to make sense to you if you've studied Elliott wave to any extent. If you've just kind of taken a glossary overview of the Elliott wave theory, then none of what I'm saying is really even going to make much sense to you. But if you study it thoroughly and you're trying to identify all the different corrections, which is the most important part of the entire theory, is really identifying these corrections, because those are the ones that you're trying to find the ends of, because you're wanting to participate in this next impulsive move out of this. You would have loved to have participated in this move, obviously, but there's really no way of well, there is, and I'll show you, because that's a volume divergence high on the hourly, or on the 20-minute rather. And I'll show you how that swing came in, but that's not really something you're going to catch quite often. Trying to catch these highs can really do some damage to your account. But identifying this and then anticipating this correction, which I did all day long, so that you can participate in the next move out of it, which should be similar to the previous one. As you go into the correction, so you go out of it. Trying to identify the ends of those corrections is really what I'm all about, because that's what gives me those really high reward to risk numbers, and that's what allows me to participate, even if it's a rare thing. If you can do that consistently once a month, even, there's no reason why you shouldn't be able to get pretty awesome returns. So that's what it's all about. And then identifying, well, is this a complex correction, or is it just a standard flat? Because we have our little A, B, C, right? And that's what I was trying to short the first time. But then you get this, and this is clearly an X wave to me, because X waves are typically straight shot moves, just like that. So that's why they call it a double three. And then you get this A, B, C, which is either a zigzag or another flat. It's probably another flat. And then you can subdivide that one into 5. All right, and I say it's a complex correction because look at how many bars you have coming down here. 6 bars. And then the size of this correction afterwards ends on that bar. Well, that's 30 bars, so it's 5 times larger. I would say anything greater than 4, really anything greater than 3 times larger, just in time, is probably you're going to want to try to count it as a complex correction, like a double 3, maybe even a triple 3, rarely. But essentially 2 sets of 3-wave patterns. So this is one set of 3-wave patterns right here, from this bar to this bar. So that's one 3-wave pattern. And then from this bar to this bar is another 3-wave pattern. And you might better count this as your A, and A, B, C for B, and then 1, 2, 3, 4, 5 for C. And that would be a zigzag. Okay? So it's a double 3. You got 3 waves up here. B is 3 waves as well. C, 5 waves. So this is a flat A, B, C. A, B, C for B. 1, 2, 3, 4, 5 for C. And then this is either a flat or a zigzag. And then that X wave you can divide into 3, but it's typically those X wave when it's dividing a double 3 is typically that straight shot move. So this is a classic double 3. I mean, this is really about as picture perfect as you could ever hope to see when it comes to identifying a complex correction. So that's why I would count this as a W, X, Y, which is double 3 correction. Make sense? Are you guys understanding what I'm saying here? Is there any way I could make it more easily understood? Because this is really about as important as it gets when it comes to identifying corrections and understanding how these waves kind of relate to each other. So there's that. And then for you guys, there's that. And I put that in the chat window there. All right. MJ is asking, how many days out of the week do you have member trading classes? Usually 2, Tuesdays and Thursdays. And then Fridays we talk about the toolbar usually. You should receive emails. All right, so identifying the end here to catch that was basically just a function of those 2 channels and anticipating that this was the first lower high, especially when you see the 240-minute chart as it had come up the way that it did. Let me see if I can draw that in. Yeah, so let's do this. So we had come all the way back. I think it was even better than a 78.6 correction. Yeah, it was much, much better. So some people were thinking that this is somehow wave 1 down. This doesn't look impulsive to me, though. You know, where's wave 4? You know? And that this might be 2 up. But I was thinking that for the longest time, but now, especially after seeing the reversal up and out of this, I'd be looking for a deep correction, hopefully down below 47.50. And then look for another long wave, because this is the perfect end of a 4th wave. And this is what I was using as a target initially for that trade, and we'll come to that when we get to that. But that's how you find your 4th wave. Let me just go ahead and talk about it now since we're here. If this is 1, whichever peak, let's say this one or that one, doesn't matter yet, and that's 2, then your 3rd wave will typically be 161.8, 138.2, usually at least greater than 100%. Not always, but oftentimes. Well, here it's well over 161.8. It's almost 200%. And if we don't use that report low and we use this low, and we count 2 as an expanded flat, as weird as that may look, then it's exactly 200%, which is actually the common end to an ABC, right? 138.2 or 200%, and then 78.6 or 161.8. All right, so that's exactly 200%. So if this is 100%, then we've got 2 of these added to the bottom of wave 2 for the end of wave 3. Right there, you see? All right, so how do you find the end of wave 4 geometrically? You connect what? Waves 1 to 3 and then draw back to 2. And either your median line is going to act as support for wave 4, or the channel line, or the point where the median line intersects the channel line. So when I draw from wave 1 to 3, what do we have right there? Well, we've got a selling climax followed by a churn bar. That in and of itself is a bottoming pattern. Selling climax followed by a churn bar, and this is occurring on a 240-minute chart. You don't see something like that on a 240-minute chart very often. All right, so that in and of itself is potential low right there. Well, it does take that low out just ever so slightly this morning late. And then somebody said something about Iran and OPEC. I don't know, but then you get this massive short covering rally out of it. So it has used that channel line as support and that median line as support. That's right where they both come. So that's the perfect fourth wave low. The thing I don't like about it is that it doesn't really count very well at all. I mean, if this is an A and that's a B, then that's one heck of a C wave. It's like over 300% the size of wave A. All right, so initially I was just happy getting 161.8 of wave A, which would have put me right here at 47.89. But I think I actually, this is the continuous contract. We'll go and look at that in a second. I think I actually made it down to about 47.60. So I got an extra 30 ticks out of that. But anyhow, trying to identify this swing high as a swing high. First of all, we had that 200% that I showed you, which I had drawn on here. All right, we're up there. You've got a couple of churn bars back to back, just bringing this over to the far right edge. You got a couple of churn bars back to back in the middle of the night, and then the subsequent morning, European session, you get this major spike in volume. Of course, that looks like nothing with true volume. It's just, you know, a tiny little bar. It's not much real high number of contracts traded there, but this does subdivide as 5 waves now. And the 5th is a perfect 5 up at this point. Okay, so you have that. You have a potential C wave high or a third wave high. It doesn't really matter at all at this point. And then you've got, how did I draw this in? Come on. And then you've got the upper median line intersecting the warning line. And what do we say about that? Just about every Friday. That's going to be one of the exact signals that's programmed directly in the reader. And it's reversed down from that before we even come to the computer on the 19th. And then as I'm getting to my desk, it's made this low, and we have the A wave up and the B wave down, and I'm waiting on the C wave up, and then I see, well, we'll get into that. That's the bar before I got into it, actually. And then it finally came up and took out that high right there, and that's where I shorted the final couple of contracts, the end of that bar. All right, so I'm looking at that, and I've got a completed 5 up. We've got whatever, it doesn't matter. It's either an ABC or a 1, 2, 3, and we've got the reversal down, and it's, you know, a leading climax, if you will. It's a climax reversal bar at the beginning of what is potentially a new downturn, and I'm looking for short, short, short. And then when we come into the trading room at, what is it, 7 o'clock, we're right here. Right here somewhere. Right here, we're at this B wave low. And then it starts turning up, and I'm thinking, okay, well, this is A up, and now we got a nice B, which is a perfect, I don't know if, I think somebody actually traded that long right there because it was a perfect ABC, perfect symmetrical move, right where the median line intersects the channel line. I mean, you see that all the time. On this day, you saw it 4 times, which is why I said it's the most perfect lower high that I've seen in so long, which is what I said right here. As I'm short and about to get stopped out, I haven't seen a more beautiful lower high in a long time, all because of this. All right, so I'm trying to short that like a hair lip waterhead, and I get stopped out too soon, and I get my panties in a wad and freak out, and then we see this, and I think I've missed it, and then now it looks like an X wave. So I'm thinking, okay, well, maybe I haven't missed it. Now I just need it to tick out this high, and if it does do that, what's it going to look like? Well, I connect the starting point of the correction, which is 0, we'll say, to the X wave, or a B, if you will. And then it draws from A or W. And then I get another chance at this. Right where they both meet, right there. You see? And that's just perfect. And then it was right here that I started freaking out again. I mean, you've got the VWAP, the session VWAP right there. I think you even have the VWAP from this low right there, yeah. And that's a pretty massive climax churn bar, and it's an extreme churn bar in the density there. So obviously a lot of demand coming in there, but it's demand that's coming in after the session closes, which the session closed right on my order right here, which is another reason why I was a little bit nervous to take it and why I was a little bit early. At any rate, then it turns back up, and I get into one right here after this big churn bar, and then I see the lower, well, this 5-minute bar right here closes pretty much on its low, and then this next one opens, and I sell one right there, and then I have the point of control of this bar right here mapped out, and that's at 16. So I sell one more at 15 or 14. I think it's 15. Yeah, right at 15. One tick below that. And I might have gotten filled at 16, but it hit that VPOC of that swing high, that 5-minute bar, and then turned down. And then the last 5-minute bar before the close of the weekend turned right back up. And then I posted that chart. Short 3 into the weekend. Right there. and then you just hope for the best. But with a setup that beautiful, you can't not take it. You have to take it. So, and then on the 2-minute, let's see if I can add it to this so I don't mess everything up. Let's see. Yep, that worked. Just to see what that looks like on the 2-minute there. Because we also have, well, not only did you have these larger channels here, but you had another channel within that channel, which is typical. I want to say it was the auto line from here. No, it wasn't either. Oh yeah, it was. Yep, you see it? So if I just draw the channel line from the swing low here, so let's say the starting point, A and then B. So what do you have right there? We'll do this another way as well, but look at what you got. So first of all, we'll call this 0. That's the starting point. Barely see that. And then 0. So let's just keep it simple and do A, B, C. And then here we have A, B, C. Whatever. And then these guys subdivide perfectly. And then so do the little tiny waves within those. It's almost eerie how perfect these sets of waves are as far as Elliott wave theory is concerned. And then you got a, that's why you can't discount Elliott wave. I mean, if you never learned how to use it and you've just heard people say how terrible it is, that's one thing. But to have learned it backwards and, inside and out, and then completely discount it, maybe you just didn't learn it properly, because you see this stuff all day, every day. It may not be perfect every day, but when it is perfect like this, it makes for, the trade that I got out of it. And the only way that I got that is because I was expecting another impulse down. You don't have to attribute that to Elliott wave theory. You could say that's purely just based on market geometry, and that's fine, but I expected, based on Elliott wave theory, a wave in similar size and scope to the wave that came into it, because I was able to identify this as a complex correction. Could I have done that without Elliott wave, just using market geometry? Well, yeah, probably, but I wouldn't have felt as secure going short right as the market is closing, and you get this huge amount of buying come in all at once. It's kind of scary to do that, But it's the market geometry and the Elliott wave and the rally. It's just a combination of all of this. And you had divergence. I want to say you even had divergence on the tick charts. Let me check. Yeah, you definitely did on the 576. And what day was that? The 19th. And no, you just had very high. Well, I'll just show you just on the 2304. You just had, very high volume per second, but you're going to have that into the close anyway. But it was this bar after I was already short, of course, that really sealed the deal for me right here. And then after it closed, it came back up to test that swing high and that volume, and it came right back to this swing high right here, to the tick. And I sold one tick below that, which was the point of control of this bar. The stopping pattern right here, these 3 bars. And then it opened to the downside, gapped down slightly, and then came down all night Sunday night. So that's this area right here, which is divergence as well, and might be too close together to pick up. No, it picks up fine. So that's a good looking divergence. And what else is it? What do you see right there? Forget about the true volume, because the true volume is showing you what the typical, at the close, you're always going to have very high volume, right? But why do we have the relative volume? To eliminate that effect, to eliminate that seasonality, and see what, yeah, it's high volume, but is it high volume relative to the volume that normally trades during that time of day? And actually, well, it's slightly high, but guess what? It's lower than what you had back here. So what do we have? We have volume divergence there, right? Which is just perfect. It's picture perfect there. And then it comes back up to test it. And this point of control of this swing high is very important, because look at how much volume was traded there. Just the point of control is 2,100 contracts. See how the point of control, it tells you how many contracts it is? So yeah, when you're coming back up on an average, you got 350, 140, let's say you got an average of 200 contracts per bar, and you run into an area where there's over 2,000 people, or there's 2,000 contracts short. And I can easily say that there's 2,000 contracts short when you're looking at the top 5 ticks, when one tick is 2,100. Chances are they're going to add a little bit to their short position and knock it back down. Follow me? And then back to this, I'm connecting from 0 to the B wave, or 0 to the X wave, and that's going to give me the C. And that's what this does. That's what that channel line does. And it intersects 1, 2, and then the 20-minute 3, 4. You've got 5 areas coming together. And they're all intersecting the same time and price. When I mean confluence in the market geometry, that's what I mean. Sometimes you'll see me take trades when it's, yeah, you got a few things coming together, but rarely will you see one that is this picture perfect. I wish this would have happened, while the room was open. This one was pretty good. You didn't quite have the area yet in the 20-minute. I mean, well, no, I can't say that it was pretty good, but you did have the warning line intersecting the median line by the time it did top out. When I was getting into it, I was getting in on a throw over of this, so I really had no business getting into it. But I was expecting a C wave high, a lower high, and I didn't expect it to be as picture perfect as this over here, and I didn't want to miss it, because I knew that this was an impulsive move down. That's a problem that I have. I get in early because I don't want to miss it. And even if I'm right, sometimes I get stopped out because I'm too early, and that's a big problem. It gets to the point where you're sitting here, you're waiting, you're watching this stuff. You spend so much time and money, and you're so involved in this stuff, and you're so just invested and committed, that when you see a setup, I don't know, it's a psychological thing for me for sure, but you don't want to miss it, And that's just an issue that I have. But anyway, when you see this happen enough over and over and over, and you get to the point to where you can anticipate it, and that's really what it's all about, is being able to anticipate these moves and being able to, when you see it all coming together and you see the area that you want to trade from, but it's still down here, and you can patiently wait for it to get up there. That's really what it's all about. You know, not being so reactive, but being anticipatory and waiting for those perfect setups. But like I was saying before, you get to the point to where, you know, you're waiting for these setups, and you kind of have a feeling what's going to happen, but you know, you get something set up, it's not quite so perfect. You get into it anyway, and I would say eight times out of 10, you're going to regret that early entry and not being able to exercise patience. So if you can just not trade until you know that you have a pretty good set of areas coming together, and you've waited on a confluence of your areas in market geometry, and it's looking, you know, it's kind of just staring you in the eye, and it's completely obvious. If you can refrain from trading until you see that happen, you're going to be a whole lot better off. So anyway, that's this trade. Any questions on any of that? Yeah, MJ, we're still in HIP chat. Are you signed up to the room? That's for the guys in the trading room. If you want to get in that, just write to Clint and he'll help you get back in there. support@trade-the-plan.com. Yep, you're welcome. Why not ABC instead of 1, 2, 3, 4? Where's that at, Ken? Yeah, sure is, Harold. Where are we looking at, Ken? 3:33. That would have been 20 minutes ago. You mean on the 240-minute chart? The 20-minute chart. 240, yeah. No, I was saying it doesn't really matter at that point. It could be a 1, 2, 3. That's what I think it is at this point. And I think that because we've just made the perfect fourth wave low. And I'm probably going to continue thinking that until this low is broken, which it might break this evening. I don't know. But yeah, I'm of the opinion that this is more a 1, 2, 3, 4. And that this was all our big double 3. It doesn't have to, you don't have to count it like that. It could just be a flat correction. But I count it as WXY because of this wave right here. That's the typical look to an X wave. What did I just say about what we saw here on the 5-minute? X waves are typically those straight shots that don't quite break the main high or low. They might take out the B wave high or low, but they're typically these straight shot moves. And that's what you have right here. So that's why I would say this is a double 3. Hey. Now, I wasn't of that opinion when we were making this low, was I? I was saying that this was a 3rd wave, and I was looking for a 4th wave up in here. But, you know, what are you going to do? You can't be right even half the time, but if you can be right enough to catch moves like that and preserve your account in between some of those big winners, then you should be fine. But yeah, anyway, that was my target, and I had drawn that. It might still be on this hourly chart somewhere. No. I had 2 hourly charts. What in the world? Yeah, this is what I had drawn on the chart. Why I have 2 hourly charts. That's not right. I had drawn this in, that rectangle, when I was getting out of this, saying that we're likely going to come down to here because that's the target for the typical fourth wave low. And if this is going to be a reversal, then it will go further. But if it's going to be a fourth wave, then it should go down to there. And that was right here. And I was marking where they came together, and they actually came together right there. You see? So that was the target for the fourth wave. And the only way that I have any idea of that is because I'm using market geometry and Elliott wave. So now you would be expecting a fifth wave out of this, and this is actually the low here. So maybe you're going to get into a second wave here before midnight tonight. And I'll be looking, actually, I won't be looking for that because I got to go to scuba school. I'm going to go get certified to go diving. So I'm taking my wonderful girlfriend to Belize here in a couple of weeks to go scuba diving. So I got to go to school here in about half an hour. But yeah, I'll be looking for this wave 2 low. And if we don't, I'm just trying to think of what this is going to look like if it doesn't work out. If it doesn't work out, then obviously this is a wave 1 down, and that's either 2 or this is an A, B, and then we get a C. That's what's interesting about this. So either way, you're likely going to get a move from about between 23 and 50. It might be setting up here before we even get off the line. You're likely going to get, at least, and I say likely, I mean, I can't say anything for sure. Let's say it comes down to 40. That's 19 ticks. You might get a solid 100 ticks out of that, even if this is not a 4 and it's a complete reversal and it's a first wave down. The only thing that makes me question whether this is a true fourth wave or if it's going to be, turning into a triangle, and this is merely an A wave, and then a B wave, and then a C, and then a D, and then an E, as it makes a contracting triangle, is the fact that this wave right here is such a strong move relative to this little wave right here. It's like 300% the size of this wave. So it would count better if you counted it as 5 down. And that's what makes me question what this low actually is. It might just be the A wave of the fourth wave. Because technically we could come down to that 50 easy. Typically you'll come down to where the 50 and the 61.8 overlap, where you have the confluence zone. Let's see if we have that. Yeah. You got the 50 and the 61.8 right there. So that could be a possible target for a fourth wave. And then potentially get that next and final move up to complete this leg up. So you'll have to email Clint, MJ, and he'll get you signed up back in there. Was it deactivated because you're no longer a member? Or did you sign back up to the trading room? If you sign back up to the to the trading room, then you should be able to get in there. Clint will help you. Yeah, that might be what it is. Yeah. So Clint should be able to get you in there. What else? I guess that's about it, guys. I guess let's take a look and see where this is likely to set up. It looks more like a little bit lower. Let's see. Looks like you got an ABC down, so it's going to be a flat. So you've got your first ABC down here. And it came right to that very high volume per tick bar, which was kind of the midpoint of that swing up. Came right down to the high of that bar. You see that? Which we mark for support and resistance for that reason. And then you've got an ABC back up. And now you need 5 down, and you've already got, let's count it like this. So you need a 4th wave and then a 5th wave, which is probably going to bring you down to 30. And you're kind of there now. Well, you will be there at about 42-ish. But then we would need to look at that on the 5-minute as well. So, yeah, it's looking a little bit lower. It's looking more like right into yesterday's close. So that's looking more like 35, 36, 34, right into this general area right here. Yeah. I'm going to try something. I'm thinking, yep, right in here. I imagine it'll reverse back up out of this box. So you're looking at probably the next half hour. Let's just see what kind of retracement and extensions. Did you guys absorb some of that? I know it gets convoluted. Yeah. It comes, though. It comes with time. But you really have to apply yourself. I mean, if you're not spending at least a couple of hours in the evening going back and marking up your charts and trying to figure out what areas you missed, how it came together, what you did wrong, then you're probably not going to improve very fast. You'll still make improvement just by osmosis, I guess, but you can speed up your learning curve by spending some time in the evenings and the afternoons, going back and marking up charts and all of that. So you have 47.16 being probably the end of this potential. And I would say, let's see. 47.27. Yeah, I guess down as low as 16, but more than likely 47.27-ish. I would say at least 47.40. Yeah, that 47.40 looks pretty good. I'm going to do an expansion here and see. Yeah, you got 35 right there. Yeah, 35 to 38 is what I would be looking, right in this spot, right in here. $35, yep. 35 to 38. So see what it looks like when it gets there. If you get volume divergence on the 2-minute, it's probably going to look kind of strange. I would say give it a shot. You got some pretty strong momentum down on the faster tick chart at the moment. Right. Yeah, and you're through the VWAP, RTH VWAP. Just a little bit more. Be a little bit of a throw under of this channel. So, all right, guys. Let me see if I missed any questions. Yep, I guess we're good. All right, you guys, I'll talk to you in the morning then. Everybody have a wonderful evening and see you in the trading room tomorrow. All right, bye.